Thank you, ladies and gentlemen, for remaining with us. This is Smart 24, where we drive your business. My name is Anthony, and we are here looking at what's happening in the financial market space. Remember to catch us live on GoTV at channel 394 on all GoTV decoders, and as well as free-to-air decoders, or on our YouTube live stream, that is Smart 24 TV. Now, in our top stories, we start with Ethiopia's central bank that has banned cryptocurrency trading in the country. Now, the National Bank of Ethiopia says transactions in cryptocurrency like Bitcoin, Binance, and Ethereum are illegal. Ethiopia's central bank on Monday this week warned citizens against engaging in illegal transactions in cryptocurrencies such as Bitcoins. Now, the National Bank of Ethiopia, that is NBE, said digital currencies like cryptocurrencies haven't been recognized by the Apex Bank as a transactional and payment method. State-affiliated Fana Broadcasting Corporate, of course, reported. Ethiopia's national currency, which is the Ethiopian birr, with any financial transactions in Ethiopia to be paid in bars according to the law. That is according to National Bank of Ethiopia's statement. National Bank of Ethiopia also warned that the digital currencies are being used to conduct informal financial transactions and money laundering schemes in Ethiopia. It called on the public to cease trading in the digital currencies and to report to the authorities when they see such illegal transactions. Enforcement agencies, tax authorities, and regulators around the world are looking for ways to regulate and control transactions in cryptocurrencies. To achieve this, the central banks around the world are contemplating introducing their own digital currencies known as the Central Bank Digital Currency, or the CBDC. In Africa, already Ghana, Morocco, Egypt, Kenya, and South Africa are exploring the central bank digital currency viability. Now, there is a difference between cryptocurrencies and, of course, central bank digital currencies. And, of course, what the case here is in Ethiopia, the government is putting restriction on, or actually a ban, not just a restriction, on transactions in cryptocurrency. As well, here in Uganda, there was actually a restriction in transaction from cryptocurrency to the Ugandan currency using mobile money and all other assets by Bank of Uganda. That is according to a statement or a circular that was issued on 29th of April from the Bank of Uganda under Mr. Andrew Kawere, who is the National Payment System Director, issuing to all users of cryptocurrency a directive to stop transacting cryptocurrency from, of course, the crypto into mobile money, that is into the Ugandan currency. So we see a trend that is following in other African countries like Ethiopia that are now even putting a ban on cryptocurrency. What is the effect of this, and what can banks do? That is an answer that could be actually from the central bank's digital currency. I remember one time we hosted Mr. Louis Chizito on the program, and I think he clarified that actually they're in talks with central bank and other key players in the sector to see that they structure out a legal framework for the central bank digital currency. That is the CBDC. So what is the difference between cryptocurrency and CBDC? Now, cryptocurrency is any type of digital or virtual currency that uses encryption to make transactions safe. They don't have, of course, a central issuing or a regulating authority, but instead actually rely on a decentralized system to log transactions and generate new units. They are called cryptocurrency because they use a technology known as, of course, cryptography, where, of course, ledgers and blockchains are made, and each transaction made affects all other transactions, and other transactions will be affected by just a single transaction. So that way they kind of bring them, some security, some sort of security, in that no one can carry out a transaction without other people in the cryptocurrency getting affected and knowing that someone has done a transaction. So this is how cryptocurrency works. The only problem with cryptocurrency and the fear of many governments is that cryptocurrency is not regulated. It's first of all also it's not liable to any rules or regulations of government and the central banks around the world. It is unregulated. That is one of the fears many people have. They also don't have a centralized issuing, that maybe all these cryptocurrencies will always be got from Bank of Uganda. They are actually 100% virtual without any centralization. They are decentralized, and they take advantage of being decentralized to actually encrypt these transactions. And this creates a problem for governments, saying that many people who are money launderers are going to use these avenues to actually make money falsely by using public money and putting it in cryptocurrency, so that no one will actually ever notice where this money has gone. This is the fear of the Ethiopia, of course, National Bank. And now what the most central banks are looking at is coming up with their own digital currency. Now, what is that? It's called the CBDC. That is Central Bank Digital Currency. Now, the central bank digital currency is different from the cryptocurrency, in that it is just a virtual format of a country's or a region's base currency. So like the Ugandan shilling, instead of having notes and notes and coins, we have a virtual Ugandan currency. Now that is called the CBDC. That is the central bank digital currency. Unlike the cryptocurrency, the central bank digital currency is regulated, of course, by the central bank of the country. And that way, probably the government feels safer, since it has a hand in regulating this money. And probably it can have control over money laundering and trafficking and so on, and all these other crimes that happen on the financial, in financial transactions. So this is the option many countries are looking at. And of course, they are being developed in a number of nations to tame the popularity of cryptocurrencies and stable coins. And that is why there are many countries fearing for their financial well-being, as many people are embracing cryptocurrencies around the world. And of course, cryptocurrency enthusiasts, they are diehards. Recently, Luna, which is one of the cryptocurrencies, lost value and collapsed entirely to $0 from over $116 per coin to $0, but still people will risk this money because they probably are expecting a higher gain, probably in the long run. That is a story as well, right there to think about. If at all you have been thinking about, investing in cryptocurrencies, you should understand how the game runs. And one of these days, we shall have someone probably more with more expertise on the program to give us a little bit more about crypto and how safe they can be, and how government can safely also bring on board the central bank digital currency right there. Now, that and more will be coming up later on other programs, and as well as on this program, as we discuss more of cryptocurrency and why is it important. Why are people having a fuss about cryptocurrencies? Why are governments having nightmares whenever they hear about cryptocurrency? Moving on to another story, of course, as we stated, of course, at first in the program, Bank of Uganda has okayed nearly 125 billion Ugandan shillings worth of dividends in payment to shareholders or in listed banks like Baroda, Bank of Baroda, and of course Stanbic Bank Uganda. Now, listed financial institutions such as Stanbic Uganda Holdings and Bank of Baroda are likely to pay shareholders nearly over 125 billion Uganda shillings in total dividend, following a nod from Bank of Uganda, that is at the beginning of last week. Then in 2020, the Bank of Uganda, of course, directed all supervised financial institutions to suspend bonuses and dividends payments to shareholders. This was aimed at strengthening the bank's capital buffers, bolstering their resilience against potential shocks, and minimizing the likelihood of their failure following the outbreak of the pandemic. According to Mr. Dr. Michael Atingi Ego, who is the Deputy Governor of Bank of Uganda, the COVID-19 liquidity assistance program of managing the rising, of course, risks from the pandemic, as well as the restriction on payment of dividends and other discretionary distributions of supervised financial institutions, expired on May 31st, 2022. While they have lifted the restrictions, there are certain conditions that they have put in place, and the payment of dividends must take into account the future assessment of risks, according to Dr. Michael Atingi Ego, who is the Deputy Governor of Bank of Uganda. Now, the management of listed financial institutions has over the years come under increased pressure from minority shareholders at the stock of to pay dividends on the back of increased profitability. The freeze on dividend distribution partly affected activity on, of course, the stock market over the last 2 years, according to market analysts. Stanbic and Bank of Baroda dividends forms the pool of dividends paid to shareholders by their parent companies, that is Stanbic Uganda Holdings and Bank of Baroda, now which are listed on the Uganda Securities Exchange. The board of Stanbic Holdings had proposed to pay a final dividend of 95 billion or 1.86 shillings per share for the year 2020. However, Bank of Uganda rejected to approve the payments. Now, for the year 2021, Stanbic Holdings has proposed a final dividend of over 50 billion or 0.98 Uganda shillings per share for each shareholder. At the June 2nd annual general meeting, of course, the chairperson of Stanbic Holdings, that is Mr. Japef Kato, said they had received approval to pay the 2021 dividends. He said that they have received Bank of Uganda approval to pay dividends totaling up to 100 billion, with 50 billion as a final dividend for the year 2021 and over 50 billion as an interim dividend for the year 2022. He said, of course, that is during their annual general meeting held last Thursday, exactly 1 week ago, on 2nd of June. On June 7th, that is yesterday but one, Miss Sophie Achak, who is the manager and investor relations at Stanbic Holdings, clarified in a phone call, of course, to one of the local papers that the 2020 dividends are unlikely to be paid. He said that they don't think there will be any further engagement with Bank of Uganda on the 2020 dividends, and the approval that was given was for only 2021. Stanbic has over 22,470 shareholders, and of course, the total number of issued ordinary shares at the end of December 31st, 2021 was about 51 billion 188,669,700 ordinary shares, and Stanbic posted an 11% growth in profit after tax of over 275 billion from 243 billion the year before, driven by growth in trading revenue. Bank of Baroda, on the other hand, another listed bank here in Uganda, proposed a 25 billion Uganda shillings dividend to shareholders for the year ended December 2020. The board has also proposed another 25 billion Uganda shillings or 10 Uganda shillings per share for the year ended, of course, in December 2021, which is likely to be approved during this year's annual general meeting. During the previous annual general meeting, the management of Bank of Baroda, that is Baroda, told shareholders that they have maintained the dividend payment at 10 Uganda shillings, that is 10 Uganda shillings per share, since they have to comply with Bank of Uganda's proposed minimum capital requirement of increase from 25 billion to about 150 billion. And they shall be able to comply with this by converting their excess reserves into capital. Bank of Baroda's net profits after tax grew to over 90.3 billion Uganda shillings in 2021 from, of course, 83.3 billion Uganda shillings in the year before. The total assets of the bank increased by about 3.46%, 3.64% actually, to about 2.1 trillion in just the year 2021. The bank's expenditures rose from, of course, 101.7% to 101.4 billion Uganda shillings from, of course, 99 billion shillings the year before. Largely, this was driven by the 46.39 jump in operating expenses to over 53.6 billion. Bank of Baroda is listed on the Uganda Securities Exchange, and of course the board of directors has recommended a dividend of 10 Uganda shillings per share, which is subject to approval by Bank of Uganda. That is another story we have been keeping our hands on. But taking a look a little bit at the companies that were actually listed, the banks that were listed on the exchange, since they were not issuing a dividend, they have faced a lot of backlash from the public, especially on the Uganda Security Exchange. Of course, these are banks that are doing so well, that are making a lot of profit, and many shareholders felt the need, the urge to actually have these banks issue their dividends before the end of the financial years. But of course, due to these restrictions and all these regulations from Bank of Uganda, of course, these companies have not been issuing a dividend, and clearly that has affected how they have been moving on the market in terms of share price. For example, let's look at Stanbic Bank Uganda. Stanbic Bank has averagely for the past 1 year been trading at 22, 21, 23 Uganda shillings. I think it hit a high before, I think 2020, it hit a high of about 28 Uganda shillings. But since then, it has never reached, I think, 25. It's been lingering between 20, 21, 22, and 23. Looking at Bank of Baroda itself, Bank of Baroda has also not had much going on for it. They're at 85 Uganda shillings almost for a whole quarter without any much activity on the market. These could be, this could be attributed to probably this, suspension of, dividend payment issued, of course, by Bank of Uganda. So it has really affected the companies. And I think as a shareholder, it is always something you always look up to see that a company gives back dividends. Now this year, we are happy that at least some of these suspensions have been lifted, though of course with some, with much freedom. Of course, they have also put some conditions in place to see that the banks don't lose out on their capital. Remember, banks, as any other financial institutions, as any other companies, are there to make money. But as, given the financial times we were going through, the pandemic, of course, the price inflations, and of course, other external and internal factors, Bank of Uganda decided to put a restriction on, what these companies could use their profit for, so that they can reinvest their, profits in capital, so as to survive the tough economic times and survive the pandemic and all these other, pressures that are coming in from all different angles And so I think Bank of Uganda also has a point here in trying not to let the companies issue out dividends or give out their profit, to probably their, shareholders and all these other expenditures. And cutting on these expenditures would help these banks to survive and grow despite the tough economic times. Remember, banks drive the economy as well. Since they keep most of our money, most of the money is kept in banks. Money that is probably going to be used by government, money in treasury bonds and bills. It's accessed through banks, of course, from the central bank to all these other commercial banks. So still, Bank of Uganda had a point here in trying to restrict these companies from issuing dividends. But still, of course, as for us here, we want our shareholders, the companies as well, they always want the best for their shareholders so that people can actually be attracted to buy more. For example, take a look at Stanbic Bank. In 2020 alone, Stanbic Bank had declared a final dividend of 95 billion Uganda shillings, and it had declared about 1.86 Uganda shillings or cents per share that is held at the company. And of course, this was rejected by Bank of Uganda. And this year, they declared a dividend of over 50 billion. And of course, this will include a 0.98 Uganda shillings per share. And of course, this is a reduction from 1.86 to about 0.98. That's almost a 90% decrease in the prospected share that the company actually wanted to give to its shareholders. So you can see that the companies are doing their best and they're trying to actually appreciate their shareholders. But of course, due to external factors, due to probably things outside their own control, they may not be able to do that. But at least, nevertheless, we are happy that at least Bank of Uganda has given us this opportunity as shareholders in these banks to actually at least finally take home something. Of course, half a loaf is better than none. And of course, if you are a shareholder in Stanbic Bank, please expect your share of the dividend of about 0.98 for every share. So if you have 1,000 shares, that is about 98. Yes, if you have about 1,000 shares, that's about 9,800. Then 10,000 shares, that's about 98,000. Now, for example, today, let's make this a little bit more practical before we leave this subject, because it's very, very important knowing how you benefit from a dividend. If you have today 220,000, yes? If you have 220,000, you can buy yourself 10,000 shares at 22 Uganda shillings. Yep. If you buy 220,000 worth shares, that means you have 10,000 shares, and your dividend will be 0.98 times 10,000. That is about 98,000. It's not a bad thing. I doubt it's a bad thing, honestly. And so if at all you are considering to invest, I think this is a good time to start investing in these banks. And of course, for Bank of Baroda, it's declaring a unit share dividend of 10 Uganda shillings per share. Meaning if I have 1,000 shares, that is 85,000, just 85,000, mitwalo munana, I can get myself 10,000 dividend. Now, you might think that is small, but remember, you still have those 10,000 shares. You can still trade them on the market when the prices go up. Probably the price goes up to maybe 95. Meaning if I bought shares at 85,000, I'm going to get back 95,000 if at all the share price goes up by 10. But yet I already got a dividend of 10,000. That now, if you add that, that is 10,000 plus 10,000, the extra profit that you earned from trading, that is about 20,000 profit. You've made that 20,000 out of 85,000. That's the beauty of the stock market. That's how people make money here. And so I would like to encourage us to start trading. And now the opportunity is here for all these banks, Stanbic Bank, and of course Bank of Baroda. And you can, their book closure date has not been declared, so you can always go ahead and start trading. We're going to a short break. But when we return with more of your top stories, as well as we also await our guest, that is Miss Sharon Tumushabe from Zeno Investment. My name is Anthony. We'll be back.